Now that 13F filings are available for the public, it's been found that Michael Burry's portfolio has a current market value of a whopping $41.29 million and a top 10 holdings concentration of 100%. The 13 FHR documents that each fund is required to file to the SEC are made available to the public and are one of the best resources for investors. Investors can keep track of their favorite super investors, the present holdings of their fund, as well as their recent purchases and sales of positions using these filings. In this video, we'll look at super investor Michael Burry and see why he thinks the economy is about to break. Michael Burry is known for making out-of-the-ordinary judgments, which has become common knowledge in the corporate world. The illustrious investor is used to brilliant punches. The investor is renowned for having predicted the demise of subprime mortgages prior to the 2008 financial crisis, prefers to buck the Wall Street norm. The 2015 movie The Big Short made a man famous for his business skills, and he's been predicting that the economy would enter a recession for the past few months. He predicts a decline in the stock market. He claims that the worst is yet to come. He continues by predicting a catastrophe in home debt that would seriously endanger the economy. Traders who were abruptly wiped out last week due to the abrupt shift upward in anticipation of a past-capable Fed pivot just got the rug pulled out from under them because the wider picture is exhibiting some serious market shifts. It's funny that so many hedge funds have priced in a Fed pivot, given that we haven't seen one in any of the central bank's comments or bulletins. However, during the past week, markets have begun to reflect the possibility of us soon reaching a full 180. These funds all use software algorithms and their positions change automatically. A large portion of the industry believed and presumably still believes that the defense pivot would occur once the dollar reached its boiling point, which, as you all know, is coming very soon. We can tell how overbought the dollar actually is by looking at the Bloomberg Dollar Spot Index. You see, the value of the dollar, specifically the US dollar, has a limit before the rest of the globe becomes intolerably uncomfortable, excruciatingly painful, and downright bankrupt. The evidence that these funds were examining suggested that the Fed was about to be forced into capitulation, in addition to the fact that the markets had changed course. When you look at the graph, for an example, the call option volume was at one of the highest levels in a decade. Furthermore, the abrupt change in financial conditions that occurred in the year 22 caused severe whiplash for automated trend rates, changing winners into unexpected losers and vice versa. Additionally, due to the weaker-than-anticipated CPI print and those PPI numbers, all of these hedge funds that rely heavily on future activity suddenly lost money, while those who were following along instead unexpectedly came out on top. People who don't want to hear this, in particular those who want to see the S&P 500 drop another 20 or 30%, may have just gotten their wish, as New York Fed President Mary Daly publicly stated that a pause in rate hikes was absolutely off the table. John William, president of the New York Fed, also stated that the central bank should refrain from taking financial stability issues into account. That is significant right now. Even in financial media, you can see how strongly these big traders feel. For instance, consider Bloomberg's fervent belief that the Fed will always favor financial stability over increased unemployment. In contrast to what the president of the New York Fed claims, this is not the situation, people. The US yield of inverting the most recent cycle lows, which indicates the market is expecting further rate hikes, is another piece of evidence that the Fed is not prepared to capitulate. Whatever your beliefs may be, it's true that we're all completely dependent on the Federal Reserve. Simply flipping a switch is all that is required to stop the downward motion. The Fed will always favor financial stability over the alternative, assuming it is true. They must be playing a bluff, though, and ultimately the market failed. Nevertheless, it appears that one fund was once more in the lead, in light of the fact that Michael Burry's 13F filing has just been made public and that he's entirely sold all of his short positions, which is interesting, coming from Burry. We refer to the fact that we've watched him suffer for a while and that he's currently without shorts. It's quite a difference to see him moving forward with his new purchases, which total $50 million. As of now, private jails house the majority of his portfolio. Since the release of his 13F, his holdings have seen enormous gains, and we now know that he had a niche for private prisons due to his tweets from a few months earlier, which very well might have been the reason for these trades. Michael Burry's decision to double down on his stake in GEO Group made headlines when hedge funds recently released their most recent 13F disclosures. However, GEO is by far the largest investment, accounting for slightly under 38% of Scion Asset Management's public equity holdings. He also added 5 more stocks to the company's portfolio. The only equity investment of the fund up until the previous quarter was GEO. As a result, given how picky Mr. Burry is about the stocks he chooses, This has led other investors and me to question whether the upside Mr. Burry sees is really as great as his conviction in the stock seems to be. For instance, QRTEA is up 41%, GEO is up 99%, and CXW is up 8%. He tweeted, "You have no idea how short I am," which is interesting, given that his position merely indicates long exposure to the market. In light of this, keep in mind how far they lag. Within 45 days of the end of the quarter, a 13F filing must be submitted. This filing is for Q3. Thus, it's extremely likely that the positions listed on his 13F are no longer valid. According to his tweet, they most certainly are, at least. It's crucial to keep in mind that markets are continuously changing. Numerous factors such as politics, geopolitical developments, ties with other nations, firm fundamentals, etc., all have an impact on the path that the economy is taking. As a result, it's very obvious that a recession is imminent if you turn your gaze on the economy at 360 degrees. In actuality, they've only recently begun to gain momentum. In the past few weeks, Amazon laid off more than 10,000 workers. Thousands of employees at Twitter were laid off, and there will be other significant staff reductions at Meta as well. Layoffs and general unemployment are trailing signs of a recession, but we also have other leading indicators that show precisely how bad the US economy is doing. Personal credit card debt, for instance, has now reached its greatest level ever, while commercial loans have also continued to increase to their highest levels ever. Of course, the most noticeable indication is inflation, which many economists now claim has peaked and is currently declining. In order to understand how inflation functions, it's needed to look back in time. We observe that inflation occurs in waves as a result of doing that. It's also vital to keep in mind that the housing market, or shelter, accounts for 32.7% of the CPI, even though inflation last week came in lower. The price of homes also decreased last month. In reality, home prices have already decreased by 7% from the high to the trough from June to the end of September. Inflation in food prices is still rising right now. Inflation is the worst sort of regressive tax, according to a recent tweet from Michael Burry. And the price of food at home has never increased this much so quickly. Is this a true turning point where we've reached the bottom? Probably not. At Snapforce, we continue to observe a sharp decline in the number of active users, and businesses are letting go of employees as demand for labor continues to rise. Furthermore, the Democratic Party will still be in power for 2 more years. The oil markets are a total mess, which has a significant impact on API. The 2 top market analysts have given contradicting predictions over the last 2 days, and depending on whether one is accurate, crude prices will be set for the rest of the year. The EU should prepare for significant market shocks after the International Energy Agency warned that oil inventories worldwide have dropped to their lowest level since 2004. In contrast to what the IEA had just stated, OPEC Tech then revised its projection downward for world demand for the 4th quarter, claiming that there is a supply glut in the markets. Should the IEA therefore prove to be correct, as a result, the cost of crude will inevitably rise, offsetting any further decline in inflation that we might expect to see in the near future. Additionally, the SPR is currently at levels last seen in 1984, but Michael Burry seems to agree if his tweet is any indication of where his head is at. "You have no idea how short I am." Burry keeps his position a secret. Users of social networks are left to wonder. They started a guessing game that largely involved tech group names. In the 2nd quarter, Burry sold the Alphabet and Meta platforms shares he owned. Burry has undoubtedly stirred up controversy once more, with many speculating as to whether he's actually discussing a bet or merely his height. The financier's height is reportedly 5'6". Stock shorting is a wager that the price will fall. By this, we've reached the end of today's video. Hope you guys enjoyed it, and we'll see you in the next one.